So what is change in state of delivery? Change in state of delivery is when price shifts delivery from buys to sells or sells to buys. So here you have your sellers being trapped and you want to locate the candle responsible for forming that swing low, a candle or a set of candles. In this case, it's a candle and you want to look at the candles open. Once price engulfs that candle's open, that'll be your CISD. And same thing for the bearish example. So on the bearish example, you're locating the bullish candle responsible for forming that swing high. And once price engulfs the candle open, that would be your CISD. So would this be a valid CISD? An important variable to take into account is that you're looking for a series or a sequence of one-sided order flow. So as you can see here, you have a bearish candle, a bullish candle, and a bearish candle. This bullish candle disturbed the one-sided distribution. So now, where would your CISD be? Remember, you're looking for one-sided order flow. And it would be this initiator, be this candle's open. So now that you know this, where is your CISD in this example? It'll be this candle right here. Why? Because you can see you have a clean sequence. This one-sided, all bearish. So let's get more familiar with the basics. Where is our one-sided order flow? Where is our one-sided markup? In this case, it will be this candle open. Why this candle open? Because this is where you have your one-sided bullish order flow. And this is just simply the basics. As we continue, you're going to learn why we picked this specific swing. And what are we waiting for now? We're waiting for a retracement. So how can you use the CISD concept? There's various ways of using this concept, notably as a micro confirmation to a macro POI. So this would be your macro and this would be your macro point of interest. So on the lower time frame, what you'll be looking for is your CISD as a confirmation. So let's take a look at this example. So for our higher time frame point of interest, which would be our macro POI, we're looking at this order block right here. Why are we looking at this order block? Because if you zoom out, you can see that we do have a break of structure. So obviously this is the daily. So on the weekly, you would have a clean break of structure right here with all the sellers being trapped. And you do have a macro rejection right here. Price failed to break these highs. So price got trapped internally and failed to break this high. And not only failing to break this high, you also have this Wyckoff schematic showing the price is turning. And this was confirmed where when price, this was the last sell-off, then you had a one-sided buy. Once that one-sided buy forming that higher high, you see here, you had a higher high being formed. A higher high being formed. So let's say where the buyers got trapped. And then price broke down and closed below the dominated markup. So this is our point of interest. Let's remove all this. So now we're going to go on the 1 hour time frame to confirm our entry. So we have our contact. And where is our one-sided markup? Our one-sided markup is right here. This is the last dominant buys prior to price making that higher high and then breaking down. So where are we looking at for an entry? Inside of this shelf. And our first target should be the extreme. As far as targets, you always want to go extreme to an extreme. So you're stacking up your zones. You're going from premium to discount, which is basically going from overbought to oversold. This will be your first target. Your second target could be the external liquidity right below. Before you proceed, please make sure you like the video. Let's look at a multi-day sweep setup. So what you want to see is obviously in a bearish setup, you want to see a high be made on Monday, another high be made on Tuesday. Then on Wednesday, what you want to see is that liquidity being swept. So that liquidity above being swept and that high getting locked in. So once that high is locked in, you would wait for your kill zone. So once you get your kill zone, which is between 7 o'clock and 10 o'clock, you are looking for your setup right here. And same thing inverted, right? So same thing inverted. So if you're looking for a bullish setup, what you want to see is you want to see a low being made, then another low being made, engineered liquidity. So this would be your liquidity. And then on Wednesday, you'd want to see that lows being swept. Once that low swept, understand that the low is locked in. So now the low of the week is locked in. And now what we're looking for is our setup during our kill zone, during our New York kill zone. So let's look at the multi-day sweep example. So what we have here is on Monday, price action made a high. And now on Tuesday, you had another high. And usually these highs are either equal or relatively equal. So in this case, these highs are equal. But I mean, if they were a little bit off, that would have still been fine. It's the fact that price is still rejecting the level. So what we're waiting for now is we're waiting for this level of liquidity to be purged. Why is there a level of liquidity? Because you're anticipating breakout traders to be trapped. So think of buyers looking at this level as from a breakout standpoint. Once price breaks this level, they anticipate price to continue to the upside. But we're looking for a trap. So now price is trapping all the buyers. Let's see if we can get a sweep. And now enters our kill zone. So now when is our kill zone? Our kill zone is from 7 o'clock to 10 o'clock. So again, 7 a.m. Eastern Standard to 10 a.m. Eastern Standard. So what does this sweep tells us and what does this trap tells us? This tells us that the possibility of us coming back above this high is highly unlikely. Why? Because all the buyers are trapped. If price comes back and takes out this high, it releases all the traders, the market trapped. So there is no point of coming back in the market. So now, what are we waiting for next? So now we're going to look for our CISD model. Let's remove this. So what do we have here? Where is our one-sided markup? This would be our one-sided markup. You see, this was strictly buys. Let's remove this. Get confused. This is our one-sided markup. And when did this occur? This occurred inside of our kill zone. So we're still currently in our kill zone. Again, timing makes this entire model work. Without timing, you can expect your accuracy to go down. So what are we waiting for? We're waiting for price to retest inside of the shelf. And this will be our stop loss. And where would our take profit be? You pull out your fib. Understand that you're going from premium to discount. So you're going from overbought to oversold. And currently we're at fair price. So you'll be taking a rejection from in or around fair price back to this level, to this extreme. So this will be your first TP. Your second TP be the external. Price reached your first level. So let's take a look at a top-down example. So what do we have here? We have a test. And this test is derived from this buying climax. So all it is, it's a test of an extreme. So when you pull out your fib, this is price testing the extreme. So you can highlight it or just label it. Doesn't matter. Now, what you're waiting for is an external sweep. Now, why am I anticipating a schematic? So what you do now is you go on your higher time frame, which is obviously the daily, and look at where price is positioned. Price is currently undergoing a macro purge. So this is your external liquidity, and price is purging external liquidity. So what we're anticipating is a turn. Now, you don't have to be completely right about the entire turn. All you need is the momentum from this higher time frame turn. So enough for you to get in a intraday position. So again, even if you're not right about the entire direction, you just need that momentum. What we're looking at here is a sweep. We're waiting for price to sweep out the buying climax. So now price took out the buying climax. And where is our one-sided order flow? This would be our one-sided order flow. This is all buys. We're not counting the red one because, like we mentioned previously, it has to be one-sided. Now, did price break below this level? And price did close beneath this candle's open. So your entry will be that pullback. And remember, when you're referencing previous candles, there is a candle flip process. So there is a candle flip process. So let's say you're looking for a 1 hour candle. On the 5 minute, you'll get a wick and price will continue down. So you'll get a swing. But on the 1 hour, all you'll see is a wick. And your take profit, like your fib top to bottom, grab your extreme level. This is your discount. So it will be your first TP, your second TP. Now you're in the trade. Hope you guys enjoyed this video. Make sure you like, share, and subscribe, and let us know what lesson do you guys want next.